Danielle Hayden is our guest today. Danielle is the CEO of Kickstart Accounting Inc. Danielle, thank you so much for joining us on the Fitness Business Podcast.
Thank you so much for having me here. I'm excited for this conversation.
Yeah, so yes, you are an accountant by trade, but when I first spoke with you, I loved right away. You said, well, I've got two passions. I've got accounting, and my other passion is fitness and wellness.
Yeah, it really is. When I'm not working, you can definitely find me on the trails. I'm always training for the next Spartan race. I'm actually a yoga instructor. So I definitely am so passionate about this industry and supporting the business owners that support this industry. We need you. Americans need you. And I love what you're doing. So thank you.
You're welcome. And I want to say thank you to you because what we love about you, and this is why I wanted you to be our industry expert today, is the fact that you are outside of the industry. You know, you're an accountant. You're not working in the gym every single day. And I know some people are like, but she doesn't understand. But you do, because you do, you teach yoga. You are an active exerciser. You like the Spartan races. So you get our industry. And I think that's what makes you really exciting about having you as a guest today.
Thank you. And we work with a lot of other gym owners, yoga studio owners, Pilates studio owners. So I do get it. I really get it because we work with a lot of other business owners who are having very similar struggles that we are partnering with to use their numbers to make better business decisions. So I'm here with you.
Perfect. Now, not that I want to leave the guys out of this or FBP family out there. If you're male, I apologize. But I must say, I absolutely love in your little bio where you said your mission is to help rule breaking female entrepreneurs understand their numbers.
Yeah, we do work with men. So if you're somebody who needs support, you can call us. We do work with men. However, we have found that women especially need the support in this area. They're less likely to put their hands up and say, I need help. And we have really created a space for women to come and say, like, I need a non-judgmental space, right? Like I need to be able to go somewhere and get help and ask questions without feeling like I'm being put down, without feeling like I'm being judged. And so creating that space for women has been really important.
Well, thank you for all of our female listeners out there. We every once in a while we have a little girl power session. So we'll count
Yes.
this as a little girl power session. So, hey, can you give us the big reveal on what the 1% is?
Yeah. So one thing that we have heard from business owners over the last 8 years that I've owned this business is that numbers are scary. Making big changes are scary. Seeing the numbers and understanding what to do with them can be really scary. And so we have created a concept that is the power of 1%. And what that means is that we don't have to change everything today by looking at our numbers and by understanding our numbers. And now that could be scary in itself. So you can even 1% that, right? Just take this one step at a time. But by pulling on the levers of your business, now not massive changes, right? I'm not telling you, go update all your pricing tomorrow by 20%. I'm saying let's change it by 1%. How can we make changes by 1% to create big, massive impact in our business?
Right. So it's simple changes, it's slow changes, but in the long run, they make a big difference. It's kind of like don't run the sprint, run the marathon.
Yes, exactly, exactly. Run the marathon and this can be really rule breaking, right? So as an industry, right? And this is typical of every industry, not just this industry. We can think, well, I have to do that this way because all of my competitors are doing it this way because everybody said to do it this way. It is okay to use this 1% to experiment, to see what else is out there, to be able to use the gems from other industries. What can we learn from e-commerce? What can we learn from the Amazon giants? What can we learn from Apple? What can we learn from other industries to pull it in our industry? Now, I'm not saying go disrupt your entire business tomorrow, right? I'm saying let's take those experiments, those experiences, the knowledge, and change 1% of your business and experiment what that might be in your business and the impact it can have.
So you have a little concept called the 7 drivers of business. Would you run through that for us, please?
Yeah, the 7 drivers. So I like to think of these as the 7 drivers or the 7 levers that you can pull by using the 1%. So the first driver is price. I know we could do an entire podcast episode on pricing and how to raise your prices and everything that goes into it. However, I want to ease our minds that when we go to raise our prices, they don't have to be big changes. We can raise our prices by 1%. We can raise our prices for our new customers by 1%. We can raise our prices for existing or long-term customers by 1%. These are small dollars that can make an impact. So the first driver is price. So increasing the price of our services and memberships. The second driver is volume, right? So how do we sell more? Utilizing our current existing customer and client base, how do we sell more to that existing client base? They are there with you already. They love you. They love your gym. They love your services. They are already in your community. So how do we increase the volume from our existing community? And then how can we pull on up from new community members? So volume is the second driver. So again, if we can increase our price by 1% and then increase our volume from our existing customers by 1%, we're at 2%, right? These are small changes that are going to make big impacts so we can have a profitable, healthy business. Number 3 is our direct labor cost and cost of goods sold. So these are the costs that we are paying to run our gym. So they are the people teaching our group fitness classes. They are our direct labor. So how can we reduce the price that you pay for your direct labor or the materials that you're using within the gym? So thinking about volume, right? So as we're purchasing the materials for our gym, how can we purchase within volume? This might be our back bar materials, our retail stores. So thinking about how can we buy that for a discount? Again, doesn't have to be big. We're talking 1%. And then how can we disrupt our direct labor? How can we do things differently and experiment with it so that we can reduce our direct labor costs? Our next lever that we can pull on is our operating expenses. And I know kind of got into it, some accounting terms here. Our operating expenses, when we look at our profit and loss statement, we have our revenue, and we have minus our direct labor, cost of goods sold. And then below that line, we have all of our other operating expenses. This is everything that we need in order to run our facility. So this is all of our facility costs, Zoom for virtual, our admin staff, our operations staff. So all of the other operating expenses. I believe in a concept called expense grading. It is really difficult when somebody asks you, hey, right, how can you reduce expenses in your business? Well, that feels like a really big, heavy question. Like, I don't know where to even start. By actually listing out all of the expenses in your business, who are all the vendors that you pay and what do you pay them for? Now, I want you to grade them. Like you're great. I want you to be a teacher, right? Get out your red pen, your green pen, A, B, C, D, F, and grade each of those expenses. Now, how can we reduce the expenses that are a grade F? Easy wins, right? 1%. Let's get rid of them. All right, now let's D and C. Do we need them? What impact are they having on our business? Are they saving you time? Are they saving you money? Are they creating efficiencies? So pulling on the operating expense lever by 1%. I'm not saying go crazy. I'm not saying kill all your expenses. I'm saying pick 1 or 2 operating expenses that you can pull the lever on. Number 5 is accounts receivable. Depending on how you bill and collect from your customers, will change. Accounts receivables, again, another kind of accounting term. It means who owes you money. How can we simplify this process? How can we ensure that we are increasing the amount that we're getting from each customer? And how can we get that money faster? So how can we disrupt the industry and make changes by 1% to get the cash in the door faster? So we're pulling on the cash lever, bringing cash into our business. Inventory is number 6. Inventory can be two things. It can be direct labor and our cost of goods sold. So again, think about the retail items that we're selling, and then our direct labor. In this lever, though, I want us to think about how much we're actually keeping on hand. And that means both people and inventory. And really assessing why and how we are doing things today, and how can we disrupt the process so that we have the right utilization. We can't have things in our retail space that are not selling, right? We need to be able to keep fresh inventory. And the same with our direct labor. We need to make sure we're utilizing our staff as much as they want to be utilized, right? That means consistently having that communication open with our staff members to make sure that we're utilizing our direct labor. Accounts payable, another big accounting term. This is, who do you owe money to? What I'm going to ask you to do here, the lever to pull, is how can I delay cash back out the door, right? So we want to be able to hold on to our cash. Now, I'm not saying don't pay your vendors, don't pay your creditors, but I'm asking you, how can you change this by 1%? So we're getting cash in the door quicker, and we're holding on to cash longer before we let it back out.
Danielle, thank you so much for going through those 7 drivers, each one very important. And I think our FBP family out there, probably as they were listening or driving and listening, could absolutely, go through the checklist right along with you. I'd like to kind of move forward now and talk about, how does the power of 1% concept work to improve a business's profits?
I think one of the most important things that we forget as business owners, we get really busy in the weeds, right? We're doing all of the things as business owners, and we forget to step out of our business and really where our business is going, right? What impacts can we make to ensure that we have a profitable business? Because is this really worth doing if we don't have a profitable business? If you as a business owner are not able to take home a paycheck or an owner's distribution, is this really worth doing? And I'm not talking the first year in business. I'm talking about as an established business owner, right? We want to make sure that we're always looking at, how do we create a healthy, sustainable, profitable business? Now, the 1% contributes to this profitability, because big changes are scary, right? We hear this from our clients all the time. When we work with our clients on our strategy calls, I am scared to make a big change like that. I don't want to disrupt my community. I don't want to lose my clients. I don't want to disrupt any relationships with vendors. I don't want to disrupt the relationships with my team members. However, by experimenting with the 1%, we're able to make small changes that are digestible to those people in your community. They can be easily accepted. And then you can experiment with them. That if it works, you can start to compound that 1%. And I like to point out, if we can get 1% more revenue in the door, faster, and we can hold on to that cash for 1% longer, we have cash in our business to be able to continue to invest in labor, to invest in our facilities, to invest in us as business owners. So if we can increase revenue by 1%, decrease direct labor by 1%, decrease supplies or cost of goods sold by 1%, and decrease operating expenses by 1%, we just made a 4% change, right? We have a big change in our business. I have a really beautiful calculator that I did with a client recently, that she didn't believe me. She was like, 1% changes don't do anything, right? Like, this isn't even worth my time. So we put this through a calculator, that if we increased her 1%, her revenue by 1%, and in each of those categories we decreased, she actually made a profit of almost $80,000 more in 1 year. $80,000 is a chump change. You can do this exercise by yourself right now, right? So open up an Excel document, take your revenue year to date and multiply it by 1%. and see what that would be. So add that to your revenue. Then take your cost of goods sold and your supplies, reduce that by 1%. Okay, you have three columns: operating expenses in column one, the amount year to date, column two, multiply by 1% in column three. Now do it for your operating expenses. Then do it for your direct labor and add that all up. See what your new net income, what your new profit could be. Just explore. It's a practice.
All right, FBP family, you must let us know if you take Danielle's advice, get your calculator out, plug in those numbers. Or actually, you said the Excel spreadsheet.
Yeah, get an Excel. Get out of Excel. The calculator will be confusing. Take out Excel. It's not a big math calculation. Year to date number multiplied by 1%.
And then reach out to us and let us know what you got. Let me ask you a question. As an accountant, you said you've worked with multiple, fitness business owners. When they come to you, is out of those 7 drivers or those 7 levers that you talked about, is there one that you just go after right away? Or do you try to really overlook all of them and then figure out which one you're going after first?
It is business dependent. So I always want to give, whenever I'm talking to podcasts, I want to be like, here's the easy win. But life isn't easy, right? And you know this as business owners, and you know this in the fitness industry. It's not easy, right? If it was easy, everybody would be doing it. So there is no quick win. Now, you could quickly increase your revenue by 1%. That's a very quick win, right? You could update your pricing on your website by 1% tomorrow. Operating expenses are another quick win. So what we find when we are working with a new client, revenue is almost easier. Pricing is easier because your point of sale system is calculating that for you. We're usually in our point of sale system more often. And so it's easy to look at pricing, it's easy to look at sales. It's the other areas that are more difficult for business owners. So as I was talking about operating expenses and your direct labor, you might have glossed over a little bit. This is where we have to get into the accounting software. We have to run the profit and loss statement. And so this is usually where we have the most opportunity to tackle with our clients, because it's not something that's as easy with for business owners to do it on their own. And so when we work with our clients, that operating expense area is usually a easier place for us to help business owners understand. So if you're somebody who feels really comfortable with revenue, my challenge to you would be to start looking at your operating expenses, then start looking at your direct labor, then look at your accounts receivable, payable.
Great information, great advice. Now, if you're a business owner, how do you decide which area of your business to apply the 1% principle?
Look at what your biggest weakness is. Look at your profit and loss statement and just read the information, right? Really look at it. Where's the yellow light, right? Where's the red light? What is preventing you from having a profitable business? What is going awry? And then that is where you can start to focus your energy. And if you're not sure, contact your money team. If you have a bookkeeper, they want to help you. Contact your bookkeeper. You need to talk to your bookkeepers. You need to get into the information so that you can see what is the area for opportunity. And that's where you can start to apply.
And speaking of, your cash flow, could you give us any examples or give our FBP listeners out there any examples on how 1% can create additional cash flow?
So we talked about all these numbers in terms of profitability, but as we increase profits, it automatically brings cash into the door. So by increasing our pricing and revenue, we're bringing cash in the door. By saving on direct labor, inventory, cost of goods sold, by reducing those costs, we are keeping cash in the door. The profitability, that's almost an accounting term. Profitability can equal cash. Now, you cannot turn around and go pull the cash out in owner's draws and pull the cash out using your business card for personal expenses. We have to keep our accounting systems very clean and clear. A lot of business owners will start to see the cash in their business, right? Because they've made some changes, they're increasing their profitability, and so they start to see the cash. And then all of a sudden they're taking owner's draws, they're maybe using some of their personal expenses on their business card. And then they say, hold on a second, I see I have a profitable business, but there's no cash. You have to leave the cash in your business so that you can pay down debt. You can strategically take owner's draws. You can plan your profit. You can reinvest in your business. You can create a fund for reinvestment so that you can grow your business and achieve those things that you've been wanting to achieve.
I think that's really good advice, but it's like one of those easier said than done, where you're pulling on the business because you just and you don't realize how quickly it adds up, where you're like, oh, I'll just charge this to the business, even though it's a personal, trip, like you said, or, you go out for supplies for the gym and then you end up buying $200 worth of groceries for your household and you put it on the
Yeah.
pull it. So I think that's great advice. Probably something that, a lot of us are guilty of that own fitness businesses out there.
Oh, I get it. And look, no shame, no harm,
No.
no foul. I recognize that this is a big, I'm gonna call it an issue, a big theme that we hear with our clients about the cash flow. So just experiment, right? Because owning a business is a one big experiment. Experiment with what it looks like to keep the cash in your business. Use your personal card and strategically take owner straws. Like really take that time to separate the two and just experiment with what that looks like.
Well, Danielle, thank you. You're just a wealth of information. I just love having you come on and finally got to reveal what the power of 1% is. Is there anything else before we wrap it up that you just want to give any additional advice to our listeners out there?
Yeah. Don't be afraid of your numbers. I know, again, that this can be a really overwhelming topic for business owners. Unfortunately, your business finances are the heart of your business. So we have to take care of our heart. We have to make sure that we know our numbers so that we can make really good strategic business decisions so that we can have healthy, sustainable profits. Don't do it alone. Make sure that you have a money team so that you have accurate bookkeeping and you can use the numbers to make better business decisions.